PT Wangsa MP Datuk Sri Johari Ghani said Malaysia's current taxation model is unsustainable and warned the country's debts could continue to rise uncontrollably. The former second finance minister told the Dewan Rakyat that this was concerning considering the amount of interest on loans that the government has to pay every 2 years, as well as the large subsidies that need to be borne. Johari pointed out that many ASEAN countries have a higher tax rate compared to the size of their gross domestic product. For example, he said Thailand's tax rate is 14.1% of GDP. The Philippines is 14% of GDP. Singapore is 13% and Vietnam 22.7%. The tax rate to GDP in Asia-Pacific countries averaged at 19.1%. In comparison, Malaysia's tax rate stands at 11.55% of GDP. Deputy Finance Minister Datuk Sri Ahmad Maslan concurred that the current taxation model is indeed unsustainable and the current percentage of tax to GDP cannot be continued. He said Putrajaya is taking steps to cut debt, including the planned rollout of targeted subsidies, expansion of the tax base, and the proposed Fiscal Responsibility Act, which is aimed at having Malaysia's debt curbed to below 60% of GDP and debt service charges to under 15% of national revenue. The FRA is expected to be tabled in the Dewan Rakyat in June. Sapura Energy narrowed net losses to 3.3 billion for the fourth quarter of FY 2023 from a 6.76 billion loss in the previous corresponding quarter. The company said in a BOS filing that the improvement was due to higher revenue and lower provision for foreseeable losses. Revenue more than doubled to 1.21 billion from 426.6 million, primarily driven by a higher percentage of completion of projects for the engineering and construction segment and higher rig utilization days for the drilling segment. The cash-strapped company made provision for impairment on goodwill on consolidation of 1.46 billion and provision for impairment on property, plant and equipment of 1.15 billion ringgit. For FY 2023, Sapura Energy recorded a net loss of 3.2 billion, which was lower than the 9.05 billion loss booked for FY 2022. Revenue rose 10.9% to 4.55 billion from 4.10 billion previously. For FY 2024, Sapura Energy said it will continue to implement its reset plan to address unsustainable debt and resolve overdue claims by trade creditors. Sapura Energy closed 12.5% lower at 3.5 cents per share, giving the company a market value of 559.26 million ringgit. Axiata Group is said to be exploring a strategic review of its businesses with total assets of about 81.6 billion ringgit. Citing people with knowledge of the matter, a Bloomberg report said the company is talking to advisors to come up with a plan to streamline its operations and raise funds to pare debt. According to its sources, options include spinning off or selling assets outside of Malaysia. Considerations are at an early stage, and the report said there is no certainty that Axiata will proceed with any deal. The report noted that this potential review comes as Axiata set sights on focusing on digital telecom, businesses and infrastructure, moving away from holding purely mobile assets. Last year, the telecom giant completed the merger of its mobile unit Celcom Axiata with Telenor's DG Telecommunications. According to its website, Axiata, which was founded in 2008, has 150 million subscribers across Southeast Asia and Pakistan. The company's total assets were worth about 81.6 billion at the end of 2022, while its total debt was about 36 billion ringgit. At the close, its shares traded 0.33% higher at 3 ringgit and 1 cent for a market capitalization of 27.63 billion ringgit. The Federal Court fixed June 27th as the hearing date for the review of the previous Apex Bench's decision last year not to grant leave to the Malaysia Competition Commission to reinstate fines on AirAsia and Malaysian airline system. The date was confirmed by Muayyad Kharomaini from Lim Chi Wee Partnership, who appeared for MyCC. On February 9th last year, the previous bench unanimously dismissed MyCC's leave to appeal and reimpose a 10 million ringgit fine each on the two carriers, which had been accused of violating competition laws during their short-lived collaboration in 2012. This was after the Court of Appeal overturned a High Court decision upholding MyCC's decision to impose the fines on April 27, 2021. The appellate court had ruled that MyCC should have abided with the Competition Appeal Tribunal's decision to lift the fines and not file a judicial review to challenge the tribunal's findings. However, some lawyers are of the opinion that the federal court's decision could be wrong and missed opportunity for the Anti-Competition Commission to review the CAT's decision. MRT Corp said it has not heard from the MACC regarding the graft offences allegedly committed by a director of a construction company involved in an MRT project, though it is ready to cooperate with any investigation into the case. It stressed that it will not tolerate any form of corruption within its project ecosystem and reminded its business partners, contractors and subcontractors that those involved could have their contracts terminated and be blacklisted. Bernama reported yesterday that the Sessions Court had charged construction company director G. Paismananathan with 2 counts of giving 655,766 Sing dollars in bribes and 1 charge of money laundering amounting to 4.13 million ringgit. He reportedly pleaded not guilty to the charges and was said to have been granted 500,000 ringgit bail with 1 surety. Paismanathan was accused of giving a bribe to MRT Corp CEO via a proxy on December 28, 2017 and January 9, 2018 to ensure that Colas Rail System Engineering, which was taken over by Pestec Technology, continued the MRT Line 2 project. At the time, MRT Corp was helmed by Datuk Sri Sharil Mokhtar, who served from January 5, 2015 to December 31, 2018. As for the money laundering charge, he was accused of transferring proceeds from illegal activities from an account belonging to Colas Rail System Engineering to an account belonging to SIAS Holding between November 16 and December 27, 2017. A check with the company's Commission of Malaysia shows that as at February 19, 2023, SIAS was 70% owned by Muhammad Sukairi Abdul Rahim, while the remaining 30% was held by Sharina Ruduan.